Have you ever sat in front of your screens, heart racing, watching a trade turn against you, knowing you should have cut the loss minutes ago, but you didn't? You froze. You hoped. You prayed. You stared at the P&L figure in red, watching it tick lower, bargaining with the charts, convincing yourself that the market simply had to turn around because your analysis was right. And then, you clicked sells at the absolute bottom, only to watch the market reverse immediately in the direction you originally predicted. That pain you felt? That gut-wrenching, sick-to-your-stomach feeling of betrayal? That's not a bad strategy. That's not even a case of bad luck. That is a fundamental lack of a professional mindset. Most people enter this game looking for a shortcut to wealth. They see the flashy cars on social media, the luxury lifestyle, the screenshots of massive profits, and the promise of easy money from a laptop on a beach. But the market isn't a charity. It isn't a benevolent entity designed to provide you with a pension or a new sports car. It's a ruthless, liquid, global battlefield that consumes the undisciplined and the unprepared. Today, we're going to deconstruct what it actually takes to survive in this environment. Let's start with the foundation, thinking like a risk manager rather than a gambler. Most retail traders think about how much they can make. They look at a setup and see the potential for a 5x return. They calculate the house they'll buy or the debt they'll pay off before they even enter the trade. The professional, however, thinks about how much they can lose. Before they even consider the upside, they are calculating the downside. They are looking at the chart and asking, if I am wrong, how much will this cost me? You need to view every single trade as a cost of business. If you're risking 2% of your account, that's not gambling, that's your overhead. It's exactly like a local store owner paying for inventory. If that inventory doesn't sell, they don't cry, they don't get angry at the customers, they don't try to force the product on people who don't want it. They adjust their strategy, analyze the market demand, and move on to the next product. You have to stop viewing your account balance as your ego. It's just a tool, like a hammer or a scalpel. When you start calculating risk before profit, you stop being a gambler and start being a professional. It's about survival first and growth second. You have to protect your capital at all costs because without capital, you don't have a business. If you lose your capital, you're out of the game. That's the first shift in your mindset. Professionals aren't necessarily smarter than you, they are just more disciplined. They have a set of rules, and they follow them regardless of how they feel. When a professional trader loses, they don't look for revenge. They don't try to make it back in the next 5 minutes. They look for the error in their process. They treat their trading plan like a pilot treats a pre-flight checklist. Imagine a pilot sitting in the cockpit, looking at a storm, and deciding to take off anyway just because they had a schedule to keep. That's what retail traders do every single day. If the conditions aren't perfect, the professional doesn't fly. They are perfectly comfortable sitting on their hands for days, watching the market move without them, waiting for the right setup. While you're forcing trades because you're bored or because you feel like you need to be in the market, they're waiting for the edge to appear. It's a game of patience, not action. You have to learn that in trading, doing nothing is often the most profitable decision you can make. The professional knows that the market will always be there tomorrow, so there is no need to chase a bad trade today. Building a long-term mindset is the only way to avoid the boom and bust cycle that kills 95% of retail accounts. You need to stop looking at your daily profit and loss as a measure of your worth as a person. If you make money, you're not a genius. If you lose money, you're not a failure. You're just a trader executing a plan. The long-term game is about consistency, not the occasional home run. If you can make 1% a week, you're doing better than almost every hedge fund on the planet. But you have to compound that over years, not days. Most people quit because they want to get rich in a month. They don't realize that trading is a marathon, not a sprint. If you don't have the patience to build your skill, you don't have the grit to handle the losses. And losses are inevitable. Expecting to win every trade is a delusion that will destroy your account. You have to accept that losing is just a tax you pay for being in the business. It is the cost of staying in the game. Once you stop fearing losses, you stop making emotional mistakes. You stop holding losers too long. You stop moving your stop-loss order further away to avoid being wrong. Many traders have completely unrealistic expectations. They think trading is a way to get rich quick. Let me tell you the truth, it is a way to get rich slowly, or a way to go broke quickly. There is no middle ground. If you're here because you hate your job and you want to make $1 million next month, you've already lost. The market smells desperation. When you trade out of need, to pay the rent, to cover a credit card bill, to prove something to your friends, you trade with fear. And fear is the fastest way to lose your edge. When you are afraid, your brain goes into survival mode. You stop seeing patterns and you start seeing threats. You become reactive instead of proactive. The truth about financial freedom is that it's not about buying a Lamborghini or flashing a watch. It's about having the freedom to live life on your terms because you have a skill that produces consistent results. It's the peace of mind knowing you can handle any market condition because you've seen it all before. It's the discipline to say no to bad trades and yes to the opportunities that fit your system. Stop searching for the holy grail indicator. Stop looking for the secret strategy that will make you rich overnight. It doesn't exist. There is no shortcut. There is only the process. You have to stop chasing the quick buck. When you look for quick money, you start over-leveraging. You start taking trades that aren't in your plan. You start revenge trading when you lose. You need to treat trading like a real business. A business has expenses, it has revenue, and it has a plan. You need a trading journal, a physical record of your trades, so you can review your mistakes and your successes. You need a risk management plan that dictates your position size, your stop loss, and your target. And you need a routine. If you don't have a written plan, you aren't trading, you're gambling. When you treat it like a business, you stop getting emotional when you have a bad week. Every business has bad weeks. A restaurant might have a slow Tuesday, or a retail store might have a week with no sales. It's the annual performance that matters. Don't fall for the myth of the Instagram millionaire. Those guys aren't making their money from trading, they're making it from selling you a dream. They show you the wins and hide the losses. They want you to believe that trading is easy so you'll buy their course or join their signals group. The reality of trading is quiet, boring, and lonely. It's just you and the charts. There are no cameras, no rented cars, and no massive parties. Just the cold, hard data. If you want to survive, you have to be willing to do the work when no one is watching. You have to study your mistakes more than your wins. You have to be your own toughest critic. The market doesn't care about your story. It doesn't care if you need money for rent. It doesn't care if you had a bad day at work. It only cares about supply and demand. It is a mathematical expression of human greed and fear. You have to survive long enough to become profitable. Most people go broke in their first year because they treat it like a casino. If you can last 3 years, you're already ahead of the pack. Focus on the process, not the result. If you follow your process perfectly, the results will take care of themselves. If you win, you win. If you lose, you learn. But if you deviate from your plan, you failed, even if you made money. Because that win was just luck, and luck will run out. You need to build a system that works in any market. A system that keeps you safe when things get volatile. A system that allows you to sleep at night. Focus on getting 1% better every single day. Master your psychology or the market will master you. Consider the difference between a professional athlete and a hobbyist. The hobbyist plays for fun, they skip practice when they're tired, and they don't study the game film. The professional athlete lives and breathes their craft. They watch the game film of their losses to understand exactly where their footwork failed. They train their body to endure the pain. Trading is no different. You need to treat your trading journal like game film. Every single trade you take should be recorded, annotated, and reviewed. Why did you take this trade? Were you bored? Were you angry? Did you follow your setup, or did you guess? If you don't document your process, you are just throwing darts at a board and hoping for the best. And when you lose, you won't even know why. Without a journal, you are doomed to repeat the same mistakes for years. With a journal, you can identify patterns in your behavior. You might find, for example, that you always lose money on Friday afternoons. Perhaps you're tired, or you're trying to force a trade before the weekend. Once you identify that, you can simply stop trading on Friday afternoons. That one change could be the difference between profitability and bankruptcy. You also need to understand the concept of edge. Many beginners think an edge is a magical moving average crossover. It's not. An edge is simply a statistical probability that, over a large enough sample size, you will come out ahead. If you flip a coin, it's 50/50ths. But if you have a coin that lands on heads 55% of the time, and you flip it 1,000 times, you are going to make money. That is all trading is. You are looking for a setup where the probability is slightly in your favor, and then you are executing that setup consistently enough to let the math work for you. It's not about being right 100% of the time. It's about being right enough, and when you are wrong, losing less than you make when you are right. This is the risk-reward ratio. If you win $3 for every $1 you lose, you only need to be right 30% of the time to be profitable. Most people obsess over their win rate. They want to be right 90% of the time. But that's impossible. Even the best traders in the world have win rates around 50 to 60%. The difference is that when they lose small, and when they win big. They cut their losers and let their winners run. They don't get greedy, and they don't get fearful. They remain objective. Think about the psychological toll. You are fighting millions of other participants, including high-frequency algorithms and institutional traders who have more data, more capital, and more speed than you. You cannot beat them at their game. You have to play your own game. You have to be the turtle, not the hare. The hare is fast and flashy, but he burns out. The turtle just keeps moving forward, step by step, focused on the path. He doesn't care about the hare's speed. He just cares about his own consistency. If you want to be a professional, you have to be willing to be a turtle. You have to be willing to be boring. You have to be willing to have months where you don't make a single penny, and be perfectly okay with it because you didn't lose any money, either. Preservation of capital is the single most important rule in trading. If you lose 50% of your account, you don't just need a 50% gain to get back to even. You need a 100% gain. The math gets exponentially harder the more you lose. That is why professional traders are so obsessed with stop losses. They know that a small loss is just a cost, but a large loss is a disaster. You need to cultivate a sense of detachment. You are an observer of the market, not a participant in the market's drama. When the market crashes, the amateur panics. The professional looks for the opportunity. When the market rallies, the amateur gets FOMO, fear of missing out, and buys at the top. The professional looks to take profits or waits for a pullback. You have to remove your emotions from the equation. If you are emotional, you are compromised. If you are compromised, you will make mistakes. And in the market, mistakes are punished instantly. There is no mercy. There is no second chance. You have to be disciplined. You have to be prepared. You have to be consistent. Ultimately, trading is a mirror. It reflects who you are. If you are impatient, the market will punish your impatience. If you are greedy, the market will take your greed. If you are fearful, the market will exploit your fear. The only way to win is to change yourself. You have to become a better person to become a better trader. You have to learn to control your impulses. You have to learn to accept reality as it is, not as you want it to be. You have to learn to be humble, because the market will always find a way to humble you. It doesn't matter how much you know, it matters how much you apply. It doesn't matter how many books you've read, it matters how you react when your money is on the line. So, take a deep breath. Look at your screens. Forget about the money. Forget about the cars. Forget about the lifestyle. Focus on the process. Focus on the rules. Focus on the discipline. And remember, the goal isn't to get rich, the goal is to become a trader who deserves to be rich. Once you become that person, the money will follow. It's an inevitable byproduct of your skill and your mindset. Start today. Build your plan. Set your rules. And never, ever deviate from them again. That is how you survive. That is how you win. That is how you master the game.